Hello, this is Julius from Basic Financials. I'm going to do a quick update today on making tax digital for income tax self-assessment. It's already come in for VAT, as most people will know. That's been phased in over a few years with everybody on it now. But originally it was going to be that from April 2023 everyone was going to be, well, not everybody, but all landlords and self-employed people with income more than £10,000 in total were going to have to join the income tax for making tax digital for income tax for self-assessment. Now that was going to be quite a big change. A lot of people probably will have been putting their heads in the sand and trying not to think too much about it, but this next year, 2023, would have been quite a big preparation year where everyone would have had to have got used to it. Now this is still going to come in, so it's still worth thinking about, and we're just going to be in the same situation now as we will later. But the news is that it's being delayed by 2 years. That's the first thing. So instead of coming in from April 2024, so it's going to come in from April 2024. It's now going to come in from April 2026. So it's delayed by 2 years. Now the other quite big change, really, quite significant, is that rather than self-employed and landlords with income over £10,000, it's now going to be landlords and self-employed people with income over £50,000. So that's going to take quite a lot of people out of the equation, which is good. I was talking to HMRC. I was imagining lots of elderly people in care homes renting out their properties to help finance their care home fees, and having to comply with making tax digital for income tax self-assessment, which would have been quite interesting. That would have, because what it's going to involve is, rather than at the moment, if you've got rental income or if you're self-employed, you would do an income tax return for the year ended 5th of April. It has to be submitted by the 31st of January following that year, and a lot of people, although some people keep their records very good and do their tax returns very quickly. Other people don't record anything and then just do everything in January just before it's got to be submitted. Well, the big change was that you're going to have to use software that's compatible with HMRC systems, complete your records on basically in real time, so that you can then submit quarterly updates during the year to HMRC, and then at the end of the year you submit a final return in the same sort of way as you did before. But obviously, to be able to do quarterly updates, you've got to keep your records going, and you've got to use this software that is compatible with HMRC systems. So that would have been interesting for those elderly people in care homes. Anyway, that's a bit of an extreme example. Well, in reality, they'll probably be having their affairs dealt with by somebody else, but there's no reason why they should have to. Anyway, so yeah, that's the big change. The delayed by 2 years and the increase in the turnover threshold. Now that's just the start. It will happen. So we do still need to think about it. It's just we've got a little bit more of a time reprieve, and at some point other organisations will be incorporated in as well. So companies will at some point do it, and then not just people with incomes of £10,000 or £50,000, but other people will be brought into it. So eventually everyone will be within income tax for self-assessment, I imagine anyway. I think that's the overall plan. Okay, I hope that helps. That's a little Christmas present from HMRC. And yeah, if you could like and subscribe as usual, and I'll see you for another video sometime soon. Thanks for listening.